Budgeting and managing debt. Today we'll be going over why it's important to budget, what tools are available to us that'll allow us to budget, when it is proper to adjust our budget, and easy changes we can make to our lifestyle that'll help us, and what to do when nothing seems to work. First of all, why budget? There are many reasons. The first one we're going to go over is maintaining good credit. When we are budgeting, we are allowing ourselves to set aside enough money to pay off our loans, to pay them on time, and not incur any late service fees or any hits on our credit that result from a late fee or a late charge. It'll allow us to increase our savings, to set money aside for emergencies or to enjoy, improve our quality of life. We won't be stressing out about our payments or paying just to make ends meet, or even just covering the necessities. Preparation for emergencies. In many cases, things come up that we're not prepared for, and we may not have enough money to pay for them. But if we budget and we keep a good track of it, we will be able to be better prepared for these emergencies, and also achieve financial freedom, to be able to retire someday and be free to enjoy everything we've worked hard for. There are many tools that are available to us that'll help us budget. First of all, we have to, when we sit down with our spouse or significant other, we have to be honest about our spending habits or about our income and anything that will affect our budget. It's always good to budget for more than the minimum payments. This way we'll be able to pay down our credit cards or loans faster than normal, and we'll more than likely save ourselves quite a bit of money in interest. Use extra cash to pay debts. If any extra cash falls into our laps, we might feel tempted to use this money for other purposes or to make purchases, but it's always best to apply this money first to anything that we may owe and save ourselves money in the long run. Use only cash for purchases. Like using debit cards instead of credit cards when available. Only purchase things that we can afford to get at the time. Determine whether refinance is really worthwhile. Again, this is one of those things that we have to sit down and really think about and weigh the pros and cons if it's worth it to refinance our home loan. If we will save ourselves money in the interest rate but have to pay money up front in fees, it may not be worthwhile for us. Don't borrow from your 401k. We've noticed that many people borrow from their 401k. Many of these companies make it very easy for us to do so, but we might be cutting out quite a big chunk of our retirement if we borrow against it and never pay it back. In many cases, these companies will give us an option to view how much we will lose if we don't pay it back, and once we see that, we may think twice about borrowing again from our 401k. Don't stretch for large purchases. If we go to a store with the intent of buying something, but we see something nicer, we might justify it by cutting back on other purchases, but then these sacrifices may be a lot more difficult to make in the long run than we originally thought. So it's always best to stick with our original intent. Also, stop using charge accounts and using, again, things like cash instead of credit cards. There are tools that can help you. First of all, the most effective way that will help you save money as well as allow you to stick with it is spreadsheets. Studies have shown that people who use spreadsheets tend to stick with their goals or stick with their budgets, meet their goals a lot quicker than people who didn't. And again, reviewing your expenses with your significant other to make sure you're both on the same page with your finances. It'll be impossible if one of them is budgeting and the other is spending money like normal. Setting specific and attainable goals. Making sure that the goals that we set on our budget are something that we can meet. If we're not meeting these goals because they are unrealistic, we might feel discouraged from continuing with our budget. Taking a look at our needs versus our wants. If we don't need a new television or any electronics or gadgets, we might need to reconsider that and sticking with just the things that we absolutely need right now. Maintain an emergency fund. Whenever possible, we encourage our members at the credit union to save, even if it's $10 or $15 a paycheck, a small amount that we can do to keep for emergencies. Generally speaking, people should keep about a year's worth of income set aside for emergencies in case things happen. But if we can't get to that point right now, any little bit will help. Buy only what you can afford. Again, this goes back to looking at your needs versus your wants. Balancing your checkbook regularly. And the reason why this is important is we may find that we pay a lot of money in overdraft fees that we don't have to. We are essentially throwing our money away if we do this. But if we balance our checkbook regularly or keep track of our accounts online using online banking or things like telephone banking, we will save ourselves quite a bit of money. We recommend to our members to keep track of your receipts if you use debit cards and write them in your check register as well. Using coupons for purchases. The average family who uses coupons saves at least $35 a month. One of our coworkers recently used coupons and ended up saving $90 on a recent purchase. So if we're going to a store regularly, it would probably be a good idea to sit down first and see if we have any coupons laying around the house or from the newspaper, or maybe trade coupons with your coworkers. If they don't need them, or if you have something that they might need, you'll be able to help each other out to save money. Save change. If you save change, if you make purchases and have extra change in your pockets and throw them in a jar, you might want to bring them in to the credit union and use our Coinstar machine. And you'll find that you'll have quite a bit of money in there, more than likely, if you've been saving that change for quite a bit of time. Using direct deposit for paychecks. Studies have shown that if people who use direct deposit instead of a paper check tend to save more money. And the reason for that is because if you walk in a check, it's very easy to ask for a certain amount of cash back, and then once you have that in your pocket, it tends to be spent pretty quickly. Maintain address updates. This is important because if our credit card bills or bank statements are being sent to someone else, we may not be aware that we've had fraud on our accounts or have been charged extra fees. Not only that, but if our address is going to someone else, they're getting all our information, and there's always a risk that there might be fraud on your accounts. Adjusting our budget. Obviously, the economy has changed within the last few years, so the budget we might have been using 5 years ago would no longer apply to today's budget. Has your income changed? Have you had any furloughs or had to take any time off, things like that? Have your expenses changed? Do you pay more in rent now than you did a few years ago? Has your tax status changed? Are you married now, divorced, have children now? These things might affect your income, and you might receive a little bit more in income tax as an income tax return than you would have a few years ago. And also, have your financial goals changed? Have your goals changed from purchasing a new car to purchasing a home or retiring? Things like that when those changes happen, we encourage you to review your budget and make any adjustments as necessary. These next few are easy budget changes that anyone can make and that will help you save money, such as eating in and bringing your lunch to work instead of spending about $10, which seems to be the going rate for lunch. Carpooling, if you live far away, if you have coworkers who live far away as well, you might be able to set up a carpool, and all of you might be able to save money on gas, which is pretty expensive nowadays. Again, cutting back on those wants. So sticking really only to the things that you need for the time being. Not using credit cards to make purchases or use them as additional income. If we rely on credit cards as additional income, and later find out that our limit has been cut drastically, we might find ourselves in a really tough spot now that that money is no longer available to us. Again, and also being aware of where we're using our credit cards. If we're now using our credit cards to make purchases such as needs, things like groceries, our credit card companies might review that, and they might cut your limit. Don't make large purchases. Again, just sticking to the things that you need. Downgrade services, cell phones. If you have unlimited text or data, you might want to review our bill to see if this is something we absolutely need. If we see that we're not using these services, we might want to cut back. Cable, if we have premium cable, again, this is something. If we don't absolutely need it or don't use it that often, we might want to cancel that service. Newspaper, maybe reading the news online or on the TV instead of getting a newspaper. But again, if you're getting your coupons to a newspaper, that might be worth it. Don't buy when you can borrow. These are things like books or videos. People have forgotten about the library in many cases, but even libraries now offer ebooks, and for people who use a Kindle or a Nook, you might be able to get your books that way rather than paying $10 for ebooks. Contact creditors immediately if you foresee a change in ability to make payments. We recommend to our members, if ever you find yourself in a tight spot and think you might not be able to make your next payment, whether it's a home loan or an auto loan, to contact us immediately so we can make arrangements. And this will save you on late charges. Also will help protect your credit. If you have good credit now, you won't have a late payment charge or showing on your credit report. Generating additional income through sources like eBay or garage sales. Whenever possible, if you have things laying around the house that you may not need, someone else might want them, and you might be able to generate some income for yourself. And ask working children to contribute to the budget. For many people, they might find it difficult to do this, but there are some cases where people have lost their homes and not asked their working children to contribute, and in that case they would have been able to save their property and not end up homeless. Now, what to do if you can't make your payments? There are a few things you can do. The first one is not pay. This you would consider, but you'd have to take in consideration that every late fee that shows up, or every late charge that shows up on your credit, is about a 100-point drop on your FICO score. Consolidating loans is also available. Filing bankruptcy, which we'll go into detail a little bit further on. Get a government grant, or hire a debt settlement company. Many people have questions about what to do when they come across these situations. What happens if your payments aren't made? Well, they could be turned over to a collection agency or sold to a collection department or agencies. These departments are very thorough and in some cases ruthless with the ways they try to contact the people. They call your house daily or your employment. So again, something to think about. Legal action may result in a lien, garnished wages, or legal judgment to pay. Some people have been taken to court over late payments just so the company can get some amount of money to pay towards that original debt. Consolidating loans. These may not be as easy to obtain as they have been in the past. Some companies may review your credit history and see that you haven't been making your payments and may determine that you're not going to pay them as well, so they might not want to extend credit to you. The rates or the payments may be higher than what you're currently paying. So again, this is something to review with your family, to check all your credit card statements, all your bills, to see if this is something that would work for you or not. And this may lower your FICO score. Some of these companies only work once the creditors or once the payments are really late. So by then, your FICO score will have already dropped quite a bit. Bankruptcy. Bankruptcy may lower your FICO score in most cases, but there are some cases where if you already had or are filing bankruptcy because your payments have already been late, you might already be at the very bottom and have nowhere to go up, so it may not affect your credit score in some cases. You may still have to pay back debts. Not everyone qualifies for the same type of bankruptcy, so in some cases you'll still be left with certain debts that you have to be paid off. May prevent you from getting credit in the future. Some creditors look at bankruptcies and wonder if it's worth it for them to lend money to the individuals. May lose some property. Your house isn't always exempt from this, so they may have to take your home, and again, doesn't always wipe all of your debt. Government grants. We see these on TV sometimes, advertisements offering government grants or assistance in looking for one that you may qualify for. Well, many of these are scams. Many of these charge you up front in order to help you with the service, and most of these do not apply to the general population. These only apply usually to very specific circumstances, and the application process may be pretty time-consuming or demanding. Debt settlement companies. Many of these companies charge high fees, and again, they may adversely affect your FICO score if they're withholding these payments to get these companies to settle. You'll notice a large drop in your FICO score. You may not see any results, or there may also be tax implications. If the company settles for less than the full balance, they might include that additional balance as income on your tax statement. You may not be able to afford the new payments that are offered to you, or in many cases these are settlements or negotiations that you could do on your own behalf without having to pay for another company to do it for you. And debt settlement, again, is very different from credit counseling. There are many resources available to our members. MyFICO.com is the only website where you can get your true FICO score. Unlike the ones that are advertised on television, this is a score that most lenders use to determine your interest rate. AnnualCreditReport.com is the only place where you can get your free credit report without any additional or hidden charges. You are entitled to one free credit report per agency per year. We generally recommend to check your credit 3 times a year. So checking Experian maybe today, and then waiting 4 months to check Equifax, and then another 4 months to check TransUnion. So you have a good idea of where your credit stands throughout the year. OrangeCountySCU.org, which is our website. Many of these links can be found there, and as well as online banking. If you have an account with us, you can check your account online at your convenience. BalancePro.net, which is a free service available to all our credit union members, which can help you with money management, budgeting, and other services. CreditCardConnection.org, a service that provides credit card ratings, so you can see where your credit card company, how they compare to other companies. And thank you very much.